Getting to grips with Glencore has been something of a challenge for analysts and especially journalists. But there are just a few investors already sitting on a potential stake in Glencore. Well, I'm joined now from Melbourne by one of them, John Robinson, the Executive Chairman of Global Mining Investments. John Robinson, welcome to the programme.
Good to be with you, Tiki.
Well, you're in the rare position of holding a convertible bond in Glencore. How did that come about?
Yes, well, not surprisingly, they were highly sought after. GMI is fortunate in that we used BlackRock Natural Resources team in London as our investment manager. Now, BlackRock Natural Resources team are the biggest investors in the resource space, with some 35 billion odd of funds under management. So not surprisingly, the big deals tend to come across their desk, and GMI benefits from that.
Now, Glencore's power, or part of its power, is its privacy. Presumably, there's a few $100 million to cash in for each of their several hundred partners if they were to float the whole thing. But I'm looking at the why of why this is, why it's happening. Is it about access to capital?
That's certainly part of the story. I think there are probably three main reasons for going down the IPO route, and of course that's one of the primary options that's available at the moment. I think the first of those is that at the moment Glencore, in terms of funding, is limited to either or both operating cash flow and the debt markets. Having availability of the equity markets would certainly help facilitate some of the deals that they would like to do. And I guess the difficulty that flows from being reliant on the debt markets was evidenced back in 2009 when Xstrata, in that immediate post-GFC period, put a discounted rights issue into the market of some $6 billion. And of course, Glencore were then faced with the difficult situation of protecting their 34% position, but not having the necessary cash to hold their line. So to overcome that, they backed into Xstrata, their Prodeco Colombian coal operation, with an option to buy that back at a later date at a premium.
And presumably they've done that now, but they are very debt-laden as a result.
Indeed, their net debt went up some 45% in the 2010 year to $14.8 billion as a consequence of buying back that asset.
One of the alternative options that has been talked about is this merger with Xstrata, but Xstrata has rebuffed them before, hasn't it?
They did indeed, yes. There was an approach made, I think it was probably early last year from memory, and Mick Davis rebuffed that approach. And I think the primary reason at the time was that the absence of a market value and the complexity of the Glencore business made it very difficult to establish a sensible value for anything like that to proceed.
Do you think if there was a float then and there was some more clarity about it, that might be a precursor to a merger?
Well, indeed. I think having a transparent market value would certainly facilitate merger opportunities, as indeed it would using scrip for acquisitions. So there's a lot to be said for having that transparent market value. And you've already mentioned, of course, the fact that the partnership structure that Glencore has means that the owners of the business have no ready way of crystallising the value that they have captured in that business. An IPO would allow that to happen.
We know so little about how Glencore operates. We know it's based in Zug, in the canton of Zug. We know it pays very, very low corporate taxes there. And we know that one of its main modus operandi is to buy shareholdings in mining companies and trade their metals and minerals. But presumably these marketing agreements are highly confidential.
Well, that's true. They are. And, of course, another aspect to their business, I mean, there are really three parts to it. There's the commodity trading part of the business. There's their investment in companies like Xstrata and the Russian aluminium producer Rusal. But they also have their own mining assets that they own and operate. And spread across all of those activities, of course, is their commodity trading activity.
At one stage, there were concerns about whether there might be a control element with Xstrata, because obviously Willy Stratotter and Ivan Glassenberg were across both boards at that stage, and Xstrata was looking to buy Olympic Dam with potentially, over 30% of the world's market share of uranium. Does Glencore have the power to control world markets in some commodities?
I'm not sure whether they would have the power to control. They certainly have the power to influence those markets, particularly those that are more thinly traded.
Like vanadium, I know, was one suggestion a few years ago.
Indeed.
It seems an awful lot to give up, John Robinson, in terms of their own privacy, an awful lot to give up to be a listed company and to have to comply with continuous disclosure.
Yeah, it is a significant price for them to pay, but I think the benefits that would flow from it are considerable, and they've obviously weighed this up and decided that if they're going to grow their business in a time when the market is running hot, there's plenty of merger and acquisition activity going on, if they're going to be a major participant in that and enjoy the growth that would flow from that, they really have little choice but to go down the route of being able to access equity markets, and that means ultimately an IPO.
And briefly, if they don't go to the float, I gather you've actually got a put on your convertibles, and you'd get quite a good return next year if they don't go that way.
That's correct. I mean, there is a fallback position. If it doesn't go the IPO route, then certainly the value of those convertibles is still substantial.
John Robinson, I thank you very much for joining Lateline Business this evening.
My pleasure.